Hello there, Lee.
Hi, Coran.
Hey, how are you doing?
Excellent. Good to see you again.
Yeah, good to see you too. Wonderful. So, this is an exciting space to be in franchising, isn't it?
It certainly is. Yeah, I would highly agree from what I've heard from some of the earlier panels for sure.
Yeah, absolutely. So, several years ago, when I was big in corporate America, and um, you know, I got approached by so many franchises saying, "Hey, would you like to consider an alternative?" Because people in our age bracket, age group, and maybe station in life, we are sort of the target for a lot of the franchising business opportunities. And it's amazing that there's an entire ecosystem. And I still remember that, I looked at several business, propositions like that. And, the one thing that kind of stopped me, I was saying, where do I get the money from? Right. And that seemed to be the biggest roadblock to many of these things. And some of these things were like, multi-million dollar, these, very good franchises, by the way, just about all of them are. And it seemed to be a very, difficult thing to get into. I don't know if you ever had that experience from your side.
Yeah, no, for sure. I mean, there are certainly a lot of franchising opportunities out there, and I agree. I think sometimes you wonder. I mean, I'm clearly not as old as you. I'm 22, so I probably haven't been approached as much as you. No, just teasing you. No, I have actually inquired about that, many times over the years, and yeah, it's a very good opportunity, like you said, but raising the capital to actually get into that position, to launch certain things is maybe a question mark. At least it was, I know, in the early 2000s and 90s when I was, according to my numbers, just born. But but no, just kidding. But no, I understand for sure. It's a challenge.
Yeah. So, and this is why this whole panel today, this section is so timely on franchising. I mean, this is one of those markets where, or it's an entire bunch of ecosystems out there that it's very dynamic. And what I'm seeing now is that there are a lot of, younger people out there that, they want to get into business themselves. And I think they're kind of looking for similar opportunities like that. So, the one thought that I have, and we're at the tail end of this entire core summit and session, so I want to bring it into a little bit of focus in terms of the secondary markets. So if you think about the primary raise being, raising capital to get into a franchise and or set something up like that. And of course, on the tail end of it, there's this whole idea about the investors in franchises to exit at some point in time or look for a liquidity event. In this entire world, how do you see this thing playing out? I mean, you have the primary raise, and then you have the secondary, which is a trade. And which one is a dog and which one is a tail? Who's wagging whom?
Yeah, I mean, I think it's the beauty of the new regulations, or relatively newer regulations, right? That allow for franchisees to actually have a regulated security behind them for what they're investing in. And Reg A and Reg CF, I'm sure you guys covered quite a bit of that today. Allow for that regulated mechanism, where you actually have a true security that's been, blessed, for lack of a better term, by the SEC, and it's something that's can have true ownership, and it can also have true transfer of ownership. I think that's where we get into the secondary trading, right? It's it's fantastic that we have these new mechanisms that allow crowdfunding to participate side by side with institutional investors, and having the opportunity to get access to some of these latest and greatest things. But where we're drifting is now that you actually have access, and you have the next greatest security in your mind. If you want to buy more, or you want to sell your current position, then
Mhm, mhm.
you've got the ability to do it in a regulated fashion, which is where, Rialto Markets comes in, and obviously working with CoreConnex,
Mhm, mhm.
and, in making sure that that becomes quite a fluid process.
Yeah, no, of course. So Lee, I mean, you and I, we have spoken about this, so over the last couple of years on how to structure and bring the technology infrastructure to all of this, and what some challenges might be. Um, what is your view of when investors look into these markets? Many of them, and as you and I, we both know, and we've been in this space ourselves, we kind of come from the public markets, and any investment in the public markets is generally relatively liquid, especially the higher capitalized stocks, right? And when you think about, we come here with that mindset. Investors come to these private markets with that mindset of, instant liquidity, and it's a public market, it's fast moving, and so on. What is your opinion about the secondary markets? Because we know we are not quite there yet. What are you hearing from investors in terms of how they view the relative lack of liquidity in these private markets?
Yeah, it's a great question and a great thing to understand. Private markets, are or can be illiquid, right? And it depends on, the amount of shareholders that you have, and
Mhm,
actually whether or not you're accessing a,
mhm,
an ATS or an alternative trading system that's recognized by the
mhm,
regulators. Um, but even in the public markets, and I think people might misunderstand this. If trading Amazon and IBM and Apple and Microsoft, I mean, yeah, those are as liquid as water, right? I mean,
yeah. Mhm,
all day long. You get quotes and very 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 close prices on those. Um, but there are stocks in NASDAQ and New York that never trade, and they're paying the
true.
full blown, listing price. They pay an average of $1 million a year just to maintain their status on those exchanges. And that's the lower end of the price scale to
Mhm,
maintain that. So when you think about liquidity, and you and I have had these chats before. I think about it more as fluidity, and we are flattening the rails. We're making this a little bit more seamless, because if
mhm,
you were without a secondary market, and working with the transfer agent, and like yourselves, to transact a private security, you had to go out and find the other side, maybe
mhm.
contact the issuer. Maybe the issuer can make a few phone calls or contact their legal, and then a bunch of paperwork would come over. Somebody would have to sign it, review it. You'd get a package, and you're talking days at best, weeks to months,
Weeks.
more likely.
That's
Um,
right.
and what's the price? What's the
Mhm,
so
mhm,
now we working closely with you guys, we can uh, put the the security up on our ATS, as long as the issuer
mhm,
allows for that, and sync the cap table to the ATS, so that anybody who comes in and wants to buy some or sell their current position, we can easily check to make sure that they have the shares that they're trying to sell, and the buyer, we make sure that they actually have the cash to support the trade that they're trying to do. Once those two criteria is met, we can match, as long as the limit prices are met and everything else is in range, and then we notify the new shareholders and the new cash holders, and obviously the transfer agent, CoreConnex, about what had just transpired. That can happen within minutes, as opposed to days, weeks, and it's all in a regulated fashion. So I think the other point I'd like to make is, you have to really consider how many shareholders you actually have. If you have
right.
500 shareholders, the liquidity is not going to be fantastic, but you're going to have the ability to still transact in a more fluid way. If you have 100,000 shareholders, your likelihood of finding somebody else that's willing to buy your shares or sell their existing shares is much higher. So you just have to keep perspective. Every company that goes through a Reg CF or Reg A is going to have a different liquidity profile. Around what it is they're trying to do.
But isn't there a larger liquidity profile out there? So, you might have one company with 500 shareholders, and you might have another one with 1,000. You might have a third one with 100,000 and so on. But the essence of liquidity isn't just simply the number of shareholders in each company specifically, but it's more about the total number of private market shareholders out there. So, so if you add them all up, it's mind-boggling. It just kind of keeps growing, doesn't it?
Yeah, I mean, there's definitely a networking effect that, again, the more issuers you get that are that want to do the secondary trading, it allows for, like you said, if there's 10 issuers on there and one has 5,000, one has 10,000, one has 50,000, all 80,000 of those participants are now able to cross-pollinate at any time. Across all of them, because we've already run AML and KYC for all of those participants, and more likely than not, they've already been processed with the payment rails as well. So it really does create this bigger, open, wider network effect for transacting. And and some folks, like that. Some issuers like that. Others, might want to keep it a little bit closer, to the existing shareholders. But either model works, and it's an exciting time because I think people are actually just starting to figure out that these private markets are accessible to them, and that they do trade similar to the process. The plumbing underneath the hood is a little bit different than the traditional listed equity markets, but the look and feel would be very similar to how you would process a trade, whether you're at Vanguard or Fidelity.com or something like that, E-Trade. It would be a similar experience that you would feel.
Absolutely. And I think it's important for people to understand the mechanics of how a secondary trade could potentially be put on, because people have come to this type of markets with a certain expectation of how these trades are being carried out. So if we take the path of you have a primary raise, and after the primary raise is closed, they become the official shareholders of a company, and once they go into the platforms and you kind of look at that and say, hey, here's my holding, I want to trade, that basically it's going to be very simple. Hit the trade button, right? You've got to hit the trade button. From that point on, a series of things actually happen. And I think it's important for us to kind of walk through a little bit of that and kind of point out where some of the issues could be and where many of the protections are built into this process. So the moment the trade is hit, there are a number of activities that are kicked off on our infrastructure platforms here that we talk about here, right? And it's all about ensuring that the positions are held free and clear to trade. There are no liens against it. There are all these rights and things to look for. And then what happens is basically that is then a seamless, I love the word fluid, like the way you mentioned. So it's a very fluid handoff into what I think is the secondary markets, right? And then the matching happens on your side as well. So once all of that is done and the matching is it, there's a counterparty buyer or a seller that's come, and the ATS entity, which is Rialto, yourself, you have vetted all that, and then it comes back into getting that new shareholder, the counterparty, getting onboarded onto the platform and onto the cap table of the issuer. That I think is generally the broad process in that. Did I miss anything there, or is that pretty much it?
No, I think you hit it. just again, if you're an existing shareholder, after a primary raise is finalized, you now have the ability to, put those in the market should the issuer decide to want to allow the trading. And again, it's that fluid, ease of ownership transfer that I think we're really facilitating here. We're kind of like a messaging hub in a way. We do a regulated match, matching buyers with sellers, communicate out that something official just took place. We notify you as the transfer agent in good control location, and that's a good thing to understand, right? Is that the transfer agent, the registered transfer agent, is also an SEC registered entity. And when they're doing the cap table management, you can assure that they're checking all of the things that need to happen. Like you said, that they're free and unencumbered. There's no liens. That there's no something going on with those shares for whatever reason. And by the time they get to the ATS, they are already they're clean and ready to go, both on the cash position and the shares position. Once we do the match, again, we just notify the bank and we notify KCX in this example, and we update it. The one thing that we were talking about a little bit earlier was, if there's somebody that's not existing on your cap table already, so it's a purchaser that you're unaware of within the issuer's cap table. You and I have painstakingly gone through this under a microscope and really devised a great way to interact. Rialto is obviously a registered broker dealer with the SEC and FINRA. So, we can run AML and KYC and pass that information over to you that, say, like me, like Lee Saba is a new, he just purchased 5,000 shares of ABC Corp. Please enter him into the cap table with this position at this price, and so on and so forth. And we've got a great mechanism using, obviously, the backbone of your technology, which is the Hyperledger instance. We both now run Hyperledger instances to do our communication, and as well as some of the database layer, which again is another layer of security in a way, because of its permissioned nature within the blockchain realm. So it's a pretty tight, buttoned up system, and if you get a match, we're trying to assure settlement at all times. So we actually pre-clear both sides of that trade, so that there's never going to be a trade fail. And that's pretty much it in a nutshell. Once the trade happens, behind the scenes, you just get notified that you did a transaction. You can see it live in the order book, and then Karan and I's systems take over.
Yeah, it's what's amazing. I think we actually went through this process once where we said, hey, let's consider a very, very simple, so-called the simplest possible trade between John and Mary, two people, right? Just two people. And we kind of went through this list of all the different checks and balances that we have to look for, and we came up with a total of like 25, if you remember. There are like 25 different things that we had to check just to make sure everything is fine, right? And what's amazing about this infrastructure is that it's already there. It's not like we're building this now. It's there. We have conducted trades, and it's like that quick. And one of the most important things, that I think, we should cover or describe is that there are 3 or 4 major things that this entire process is built on. It's built on certain principles of trust. And I have to think about, people who come to this sort of markets from the public markets where it seems like, it's a peer-to-peer transaction. It's a Bitcoin kind of thing. It's a peer-to-peer transaction. When things go wrong, that's when they cry, help. Okay, that's the problem.
Yeah, I mean, there's recourse. Again, we're talking about regulated instruments here.
Exactly.
The SEC is looking out for the investor community in this process, and that's why they make us, validate ourselves and hit the high bar to become a regulated entity. Yeah, no, I think we're trying to make this as smooth as possible, even though we're designing a new market structure under the hood. But to the layperson, or as my mom would say, on a trotting horse, you wouldn't know, you pass by it and not even realize, how complicated it might be underneath. And even the stuff that happens, at, let's call it E-Trade or something, right? I mean,
Yeah.
there's a lot of movement underneath there that they make it look simple, but it's not. And we're doing something similar underneath it, but it's actually focused for private markets and focused for the regulatory status of private markets.
Yes.
And again, they don't have a central clearing model, and some folks on the webinar might know about central clearing and the DTCC, which is the Depository Trust and Clearing Corp, where all U.S. trades, for the listed stocks have to pass through. We have the ability to bypass that. We don't need to do that because of TA status, registered TAs, and the private placement connotations. So it's a really exciting time for these folks. And I've heard some folks mention it's the private markets are the new public markets, and that's in some ways I can see how they get to that conclusion.
Yeah, and we have been tracking the evolution of the public markets versus the private markets, and the statistics show that the influence and the growth of public markets it may still be growing, but not at the pace that it was before, right? And now the private markets are just taking over. The growth rate is high. In fact, in last couple of years, we had anywhere between I believe 1.2 trillion in the public markets, but 2.9 in the private. So you're right. I mean, the private is the new public. That's the new norm.
Oh, for sure. I mean, when you look at the statistics, for private companies just in the United States alone, it's somewhere, and again, these are kind of vague numbers, but somewhere between 26 and 30 million U.S. private companies in the United States. Right. If you look at the listed companies across, New York and NASDAQ, I think it's under 4,000 now.
That's right.
So you have a wide berth of folks to choose from and think about, especially if you're deep in that industry or you have a good feeling about that company or entity. And there's also loyalty, that is loyalty or just familiarity, with the company, that if you frequent that shop or that company, and you buy their products, and now you can be an owner as well in the success of that. You're like, this thing's going to go to the moon. I know it. Like this, I don't know. I'm going to make it up. This hamburger that they make is just off the charts. It's the best thing I've ever had. I know that this is going to take off. And now there's this ability to participate in the primary market. But you know what? I can also, if I didn't get enough in the primary, I can now buy some more in the secondary market, right, or I can sell my current position, maybe at a higher price, and then come back, or maybe I sell a piece of my position because I had a life-changing event. And I think the other thing too is I don't know if we've spoken about it, and I wasn't able to dial into all day, but is the employee stock option plans as well.
That's right.
Private companies now, companies are staying private longer. And the fact that they're staying private longer means that, you might get paid in stock, and you can't realize any, on paper, you might have some money in the, theoretically, but there was no way to realize that money. Now we've got this fluid process that allows you to trade in and out of that. In employees, we found, are very responsive to this because, they don't have to have a 10 or 12 or 15 or never exit. They can have a, we did a CF, we wait the year it goes. If we did a Reg A, we wait, as soon as the raise is done, and if the company allows it, we can happen. So it's gotten a lot of great response from that perspective.
Yeah, I can't tell you how much you and I have worked on this one. We've spoken to so many different constituents in the private capital markets, and it is amazing how much we have done. And people listening in on this, should really realize that none of this is fiction. It is not a pilot. It is not a POC. The rails are there. We run new, real engines on this, real traffic on this. It's all there. And that is a real exciting part. There's a swell, undercurrent of private markets and private investors, that are just simply coming on board and coming on board and coming on board. And we see this, you and I and some of our other, speakers here and our core partners, we see this all the time, and we have to wonder, wow, we are so thankful, I think, to be part of this ecosystem, to be partners, and to move this entire revolution forward. So, Lee, we're having a lot of fun and much more to come. So thanks to you, and thanks to all of our other speakers for enlightening and educating what is actually possible in these private markets, especially in this franchising space. And we will have many exciting times. And so we will see. I mean, we'll have a lot more core summits coming up in the future, but this is an exciting space to be in. Once again, thanks, Lee, for your participation. And as always, it's very enlightening and exciting to talk to you and these other participants on on these core summits. Thank you very much.
Thank you, Karan, and thank you, Core Connex. It's great.
Thank you all. Bye for now.